Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we're doing the ultimate stock market battle ever in this channel's history. We're battling Apple against Google, against Amazon, against Facebook. The behemoths, the tech titans, guys. Which one of these stocks is truly the best? Which one of these stocks should I actually be invested in? I'm invested in one of these currently, guys. Am I even in the right stock? We're going to compare a bunch of different categories today, and we're going to find out which one of these is actually the best in my opinion, guys. So we're going to find all that out today. And at the end of this video, I got to remember to do a rant about something I saw this weekend that absolutely blew my mind. Like I cannot believe a retailer is making as bad a decision as they're making right now in regards to Amazon. I got to remember to mention that to you at the end of the video, guys. So we're going to compare these four today. We're going to see which one's the best stock of them all. You know what? Let's get into this. So the first category we're looking at is products or the services they sell. Now, we're not looking at all of them because otherwise this would be like an 8-hour video. We're just kind of focusing on the main two type of product services these companies have and the main ones that kind of drive their stock up or down. So with Apple, it's an iPhone company and it's a services company. The iPhone makes up well over 70% of the company's total revenue. And then when you factor in the services, which is their fastest growing and now their second biggest business at this point in time, guys, over the iPad, over Macs, over all those kinds of things, the iPhone is so critical to all that. So between iPhone and between services, over 80% of Apple's whole revenues and profits are coming from those two segments. So those are the things that really drive Apple's stock up or down or drive the entire company, guys. I mean, iPads are great. They sell a phenomenal amount of those per year, right? Macs are great. You know, they have the AirPods now. They have the Apple Watch. They have all these things, and those are all great things. But at the end of the day, Apple lives and dies by iPhone and by the services people buy, you know, whether it's apps, whether it's music, whether it's, you know, services like Netflix, they buy through the iPhone, all those kinds of things, guys. Storage, cloud storage, all that stuff is all key to the iPhone game, which is key to Apple. That's Apple's business. Google, what are they? They're a search engine and they are YouTube. Now, Google, like all the other companies, they have a lot of other things going on for them, right? But the main things that drive Google's business is the search engine and what you're watching this on right now, YouTube. That's the growth engine for Google. So Google lives and dies by those two products, and everything else is just, you know, way off in the distance right now. You know, it's not even really worth mentioning because those two products, you know, dominate for Google right now. Then we have Amazon. What is Amazon? Well, obviously Amazon is known for what? Being a retailer, the biggest online retailer out there, and then also the web services, which is their kind of like a business portfolio of products they offer to businesses, which is really growing very fast in the enterprise type customers, guys. That business is growing extremely fast for Amazon, and that's become a huge business for Amazon at this point. That's their two main businesses. And then Facebook, what are they? They're Facebook, the platform, and Instagram, the platform. They have some other exciting things. They have WhatsApp, they have Oculus, those kinds of things, but let's not fool ourselves. If you took away Facebook, you took away Instagram, Facebook would be, you know, a company worth probably, you know, 1/10 of what it's valued at right now, or maybe 1/20th. You know, that company's completely run by Facebook and completely run by Instagram, guys. So the question is, of these companies, which one would you rather have? Which company is in the best position as far as the products and services go? And it's like such a tough decision because they're all phenomenal. I mean, who wouldn't want the Facebook and Instagram platform or want Amazon.com and the web services? And who wouldn't want, you know, this and that? For me personally, I would say the best business of all those is Apple. The iPhone game is the key to everything in the end, right? What do you use Facebook, Instagram on? You're using it on a smartphone. Everybody, like it seems like everybody in the developed world now has to have a smartphone. If you don't have a smartphone, then what do you have? Like that's like the one thing. It's literally the greatest product in the history of mankind, the smartphone, and Apple being in the forefront of the smartphone game, right? Especially in the developed world. So when you have a product that is such a need and such an expensive thing, and it's such a need in every single person's life, That is more valuable than anything, because what do you use Facebook and Instagram on? Use it on your smartphone, and if you live in the developed world, the United States, Europe, some of those places, you're probably using an Apple phone, an iPhone at the end of the day, and you're probably using the services, so, Amazon.com, what are you probably using it on? You might be using it on your iPad, you're probably using it on your iPhone, guys. So you look at YouTube. A lot of you guys, I know from the statistics I look at, so many of you guys watch this on your Apple devices. I can see how many people are watching on an Apple device right now. Like, it's incredible, in Google search, it goes through an iPhone at the end of the day. So I gotta say Apple would win this category over the others, even though all these companies, it's like splitting hairs, because who wouldn't want, Facebook and Instagram? I mean, those are extremely powerful. Who wouldn't want Amazon.com? It's really tough, with all these guys. It's tough because these are all great run companies. Now, let's look at the 3-year income statement at this point. 3-year income statement. We'll see which one has the most impressive 3-year income statement. So the first one up here, we're looking at Apple. Apple, in my opinion, has the ugliest 3-year income statement. They did $182 million in revenue in 2014, $233 million in 2015. Then they went down to 215, or excuse me, these are all billions. I don't know why I was saying millions. $215 billion they did in revenue in 2016, guys. So that's a little worrisome there. And then you look at the profits down there. They did $39.5 billion in profit in 14. 15, they did $53.3 billion. And then this past year, they did $45.6. So their revenue went down and their profits went down. And this is the only company in which that happened. So I got to give Apple the worst 3-year income statement out of all these for sure, guys. Then we look at Google. Google has a very impressive one here. They did $66 billion in revenue in 2014. They did almost $75 billion in 2015 revenue. And then this past year, they did over $90 billion in revenue. So great increases all 3 years there. And then you look at the profits, they went from $14 billion in 2014. Then in 2015, they did $16.3 billion. This past year, $19.4 billion, guys. Google has a very impressive one. I'm not going to bless Google with the best. There's actually going to be one stock we're going to look at that is the winner in this category. Amazon, let's look at Amazon here. Amazon, very impressive. So $88.9 billion in 14. They did $107 billion in 2015. $135 billion this past year, almost $136 billion. Extremely impressive revenue growth. And then we look at the net income, it's certainly going in the right way. It was negative in 2014. Then we had over $500 million profit in 2015. And this past year, $2.3 billion in profit. So Amazon's very impressive in the respect that it was also non-profitable a few years ago. And now the profits are going up dramatically. But that still can't win this category because the profits are still so dramatically low compared to the revenue at this point. This next company, silly 3-year income statement here. 2014, Facebook did $12.4 billion in revenue. Then they went up to almost $18 billion in 2015. This past year, over $27 billion in revenue, guys. Almost $10 billion increase there in revenue. And then the profits is what blows my mind. They did just around a $3 billion profit in 2014, $3.6 billion profit in 2015, and then this past year, over $10 billion profit. Over $10 billion profit, guys. Facebook easily wins this category. I can't put anybody but Facebook. When you have I can't think of another public company in the entire world that had their net income go up over $7 billion last year. I can't think of one, and I track so many ridiculous amount of companies, guys. I can't think of anybody that had their net income go up over $7 billion last year, guys. Absolutely incredible numbers out of Facebook. They easily win that 3-year income statement there. Now, 3 years is important, but let's pay attention also to the latest quarter these companies reported. We're going to look at what are the latest quarters they did and what type of numbers are they doing at the moment, right now, because all these 3 of these companies reported numbers within the last couple weeks here. So Apple had some pretty impressive numbers. Now, something to pay attention to with Apple, they did have 4 extra days on the month of March versus the previous year, because the previous year, the quarter ended March 26th. This past year, the quarter ended April 1st. So they did have a few extra days, but still. $52.8 billion in net sales compared to $50.5 billion in the previous year. So the net sales are going up. That's definitely a good sign there. And then I want to pay attention to the net income down there. They did over $11 billion in net income this year versus $10.5 billion the previous year. And then we look at the earnings per share. Very impressive. They did $2.11 this year versus $1.91 the previous year. So Apple definitely, impressive, but not extremely strong, but it's good to see growth at the end of the day, guys. Then we go ahead and we look at Alphabet, Google here. Google, extremely strong last quarter. So they did $24.7 billion in revenue. That's compared to $20.2 billion the previous year. Then you go down and look at net income. They did over $5.4 billion in net income this past year, compared to $4.2 billion the previous year. They did $7.85 in earnings per share versus $6.12 the previous year, guys. Great numbers out of Google. They are growing extremely fast. So they had a great 3-year income statement. Wasn't the best, but they had a great one still. And they have a phenomenal most recent quarter here. Then we go ahead and we look at Amazon. Holy smoke us. So they did $23.7 billion in revenue this past quarter in just product sales versus $20.5 billion the previous year. And you look at service sales, they went from $8.5 billion last year to $11.9, almost $12 billion this year, guys. Basically $35.7 billion in revenue this year versus $29 billion in the previous year. Extremely impressive. And then we go down and we look at net income there. Net income is up nice, but not, blow me away type nice. Is $724 million versus $513 million. That's definitely an increase, but still, we see that for the amount of revenue the company's getting versus what's actually reaching the bottom line at this point, it's still, dramatically less, than what a normal company would be producing. That's because Amazon's spending a lot of money right now. Then we go ahead and we look at Facebook here. Facebook, holy smokes, this company is ridiculous at the moment. Over $8 billion in revenue. Over $8 billion in revenue this past quarter versus $5.3 billion last year in the same quarter. Then you go down, you look at net income. They did over $3 billion net income this past quarter versus $1.7 billion the previous year. $1.06 in earnings per share this year versus 61 cents the previous year. Facebook easily wins this category once again. Facebook has had an amazing 3-year income statement and amazing, absolutely phenomenal most recent income statement, for the last quarter, guys. Absolutely mind-blowing numbers what Facebook is doing right now, just with the whole company in general. Now we got to go ahead and we got to look at the balance sheet. Balance sheet, you know how I value a balance sheet very heavily. Let's look at these and let's see which company has the best balance sheet. All 3 of them pretty much have very good ones, but let's go ahead and look. So first off, Apple. Apple has over $15 billion sitting in cash. Over almost $52 billion sitting in short-term marketable securities, otherwise known as short-term investments. They have almost $190 billion, $189.7 billion in long-term marketable securities. And then you do look, the only bad thing with Apple is they do take on a lot of debt now. They do borrow a lot of money to do these share buybacks and dividends and things. They have $84 billion in long-term debt. So Apple, still a phenomenal balance sheet, even with $84 billion. I mean, that seems like a ridiculous number, but when you got, nearly $300 billion in cash and investments and those kinds of things, guys, $84 billion isn't that much. I mean, most companies, that would be like a ridiculous amount. Apple, it's like, it's not even that much. It's crazy, guys. We look at Google McDougal here. So Google has over $18 billion in cash. Very impressive. $74+ billion in marketable securities. And then they have just around in long-term debt, just under $4 billion in long-term debt, $3.9 billion to be exact. Extremely impressive balance sheet out of Google there, guys. I mean, holy smokes, their cash investments are so far outweighing their debt. It's amazing. Then we look at Amazon. Amazon's actually got a pretty decent balance sheet, even with all the spending they do. They have $15.4 billion in cash. They have $6 billion in marketable securities. And then they have $7.6 billion in long-term debt. So they got about a 3-to-1 ratio of cash and investments versus debt. That's pretty good for Amazon. You would think Amazon would have an ugly balance sheet considering how much money that company spends to expand the business, but they actually have a very impressive balance sheet. I was blown away. I've never really looked into depth on Amazon's balance sheet, and I was like, wow, that's pretty dang good. And then Facebook here. Facebook, last but not least, is cash and cash equivalents of just over $7 billion. They have marketable securities of around $25 billion, guys, and they have no long-term debt at all. So Facebook, absolutely amazing balance sheet, but I got to give it to Google on this one because they have over $90 billion in cash in investments versus only $4 billion in debt. They are the winner in this category. Next one up, we want to go ahead and we want to look at the PE ratios. We want to see how overvalued or undervalued these type companies are, guys. So let's look at these. So Apple right now has a trailing PE of just over 18. They have a forward PE of just under 15, about 14.73. So Apple, I would say, is pretty fairly priced at these type PE ratios. Google McDougal has a trailing PE of 31, and they have a forward PE of 23.29. Now, Google, we know, is a little bit of a faster growing company, so they're going to command a little bit of a higher valuation than, someone like an Apple that's growing a little more slowly. Then we look at an Amazon. Amazon has a trailing PE of 178, but they have a forward PE of 83. So we see Amazon has what seems like super high PE ratios, right? But they're growing at such a rate that a lot of people kind of bypass the whole PE ratio and say, well, what are they going to be earning in 3 years from now, 5 years from now? It's going to be dramatically more money. So therefore, that those PEs maybe aren't that high. And then we look at Facebook last year, guys. They have a trailing PE of 43 and a forward PE of 24, and that's just because they are increasing, profits at a substantial rate. So this particular category, I would have to give this one to Apple, guys. A 14 forward PE on a company that, in my view, should be viewed as a company such as Procter & Gamble or Johnson & Johnson, something like that, because it's just a consistent company now. The huge growth days are definitely behind Apple. They don't need to have that huge growth. They have an $800 billion valuation now. They don't need to have that huge growth. They just need to be consistent. People that buy an iPhone are very likely to buy a new iPhone, so on and so forth, stay in the ecosystem of products just like I do. I use a Mac, I use an iPad, I use an iPhone, all those kinds of things. They've won customers like me, and as long as they don't turn off customers like me, when the tens and hundreds of millions of other me's out there, then they will be fine in the end, guys. The same way if somebody buys Cottonelle toilet paper at the end of the day, and that's the kind of toilet paper they buy, they're probably going to buy it next week, and they'll probably buy it the week after. And same thing with iPhones and iPads and everything Apple sells. If they can just keep people happy, keep coming out with great stuff, they're going to keep winning in the end of the day, guys. So then we got to judge who is the best CEO of these companies. Now, all four of these companies, in my opinion, have very good CEOs. We got to judge which one is actually the best of the bunch. So Apple, we have Tim Cook. Tim Cook has done, in my opinion, a very good job running Apple. Now, are they innovating the way they used to with Steve Jobs? No, absolutely not. Let's not kid ourselves. However, guys, that doesn't mean he's doing a bad job. They're innovating enough, obviously, to stay relevant and stay on top of the game, right? They are. The proof is in the pudding. The proof is in the numbers. They're doing enough to stay on top of the game. And he's doing a great job running the company from a respect of distributing this mass amount of money that's coming in through share buybacks, through dividends, some of those kinds of things that Steve Jobs never did. So he's had huge shoes to fill. I mean, arguably, what job would be harder to fill than the job that Steve Jobs laid? A legend, a business god, a people that don't even care about business, don't even care about entrepreneurship, don't even care about the stock market. People that don't even care about that stuff know Steve Jobs and know Steve Jobs' story. You're talking about a legend, a super famous legend, a business god, and you got to fill his shoes. I would say he's done a hell of a job with that amount of pressure on him. So hats off to Tim Cook. He's done a good job. Eric Schmidt, I would say he's done a good job with Google as a whole, just continuing to grow the company. He's been there for a long time as CEO. He's got Sergey Brin and the other guy that started, I'm trying to remember the name of the other guy that started Google, Sergey Brin and Larry Page. Those two guys are still very involved with the company. Eric Schmidt's kind of just like the guy that oversees everything. He's kind of like the grown up in the room, I guess you could say, even though, I'm sure Google would be fine with either one of the old guys running the company. So I would say Eric Schmidt's done a good job. Jeff Bezos, what can you not say about the guy? The guy has literally gone into the most competitive space possible, retail. There's no space, in my opinion, out there more competitive than retail, especially in North America. And he's gone in there and he's basically dominated. He came in there, and we still got to talk about that rant I got to talk about in a little while. He's come in here and just taken over the game, guys, over all these big companies that are so built up and all these things, guys, and all the smaller ones trying to compete with him. He's come into the most competitive space possible, and he's won the game. Ridiculous, ridiculous. And then we look at Zuckerberg. Zuckerberg is phenomenal for a few reasons. I mean, thinking of Facebook, implementing it, keeping 1 billion users on the platform, amazing job by him. But then you look at the acquisition he did a few years back, I think it was about 4 or 5 years now, when they bought Instagram for $1 billion. They stole that company, $1 billion for Instagram. That platform is probably worth $80+ billion if it was a standalone company now, guys. $80+ billion, and he bought it for $1 billion. It was the steal of this century, guys. And what a job! What a job he's done. And he's also done a lot of other, interesting things around Facebook and around other products other than Facebook, with Oculus, with the acquisition of WhatsApp. But I look at him strictly from the point of building out Facebook, getting it as big as he's gotten, and not having it fall off the way MySpace fell off or something like that. And then also the acquisition of Instagram and growing Instagram. I think he's done a phenomenal job there. So in this one, I got to give it to Amazon CEO Jeff Bezos. I mean, I can't put anybody above the guy. I really can't, because, like I said, he came into the most competitive space and he's won the most competitive space. That's amazing to me. So the question is, which one of these stocks is the best one? So basically, how we're judging this is the company with the lowest score is going to win. The company with the lowest score wins, because if you win the category, you get 1 point. So, obviously you want to have as many ones as possible, so you have the lowest score. And then the company that has the highest score is the ultimate loser there, guys. So product service, I ranked that as Apple being the winner, so they get 1 point for that. We already talked about that in depth. Google, I look at as being the second place finisher here, guys. Google, I mean, the Google search engine, it's so intertwined with people's lives. The YouTube platform, the amount of creators on the YouTube platform, it's amazing to me. This channel, by the way, we just reached the top 100,000 most subscribed channels on YouTube. And we have a lot of subscribers, and we have a lot of people watch this channel. We just barely reached the top 100,000, guys. The top 100,000. That just shows how many different content creators are out there doing things and delighting people every day. So, it's hard to take that stuff away. And then Google's got a lot of other exciting things going on other than that. Amazon, I put at number 3. The Amazon.com, the web services, just phenomenal. And then Facebook I actually put last. And it's one of those things. It's splitting hairs between these. But Facebook I look at, and I would say that's probably the easiest one for users to probably go from one platform to another. Maybe they're on Instagram now. Maybe they start going to Snapchat. Or a service that's not even created yet, that just comes out the next Facebook or something like that. And maybe Facebook can't acquire them, kind of the same way they couldn't acquire Snapchat. So, it's splitting hairs between these companies, but I got Apple, then Google, then Amazon, then Facebook last. Then we go 3-year income statement. Facebook had the best one by far. Then, in my opinion, Google had the next best. Amazon had the next best, and Apple had the worst of them all, because we know from 2015 to 2016 revenue and profits dropped quite a bit there, guys. Then we go to the latest quarter. Latest quarter, we had Facebook, by far the best in my opinion. Then Google. So as you see, Facebook's doing pretty dang good at this point. Then Google, in my opinion. Then Amazon, and then Apple. Apple had a decent quarter. They had some growth, but of the 3, they had the worst one of them all, unfortunately. Balance sheet, I had Google number 1. You guys know how I feel about that. Facebook number 2, because they have a lot of cash and a lot of investments and no debt whatsoever. Then we had Amazon number 3. They're actually pretty impressive. Apple number 4, despite how much cash they have, they do have $84 billion in debt that they have to pay interest on. So in my opinion, even though their balance sheet is phenomenal, they do get the worst of these 4. It's so competitive, guys. Then we go ahead and we look at the PE ratio. Apple had the lowest, so they win in my opinion. Only a 14 forward PE. I believe it should be higher than that in my opinion. Google, number 2. Google number 2, Facebook number 3, Amazon number 4. They had the highest, obviously, because they're expected to grow massively in the future. We'll see if that happens. CEO, you guys know I've rated Jeff Bezos the best. Then I put Zuckerberg as number 2, in my opinion. Then I put Tim Cook as number 3. The job he's done filling in for the business god Steve Jobs is amazing. And then I put Eric Schmidt, actually last place, even though he's done a phenomenal job at Google overall. He got the last place finishes. So basically the final scores, lowest score wins, as I said. Apple got 16 points. Google got 13 points. Amazon got 18 points, and Facebook got 13 points. So Google and Facebook actually tied in this game, guys. And I was very impressed, and just the income statements alone helped Google, get in a place where, Facebook get in a place where they could actually tie Google here, guys. And that's kind of how I feel. If you know me, I'm invested in Google, and I'm just kind of at a place where I love Google, but at the same time, I'm like, should I be in Facebook? And it's always a question. Should I be in Google? Should I be in Facebook? Should I be in both? Should I be in both? That's a fair question, guys, but I just feel like I like Google better because Google's products I use on an everyday basis personally. I use, services like the, Google search engine every single day, multiple times per day. I watch YouTube 30 minutes to an hour per day. Some of those kinds of things. The only phone I'm ever thinking about maybe getting rid of my iPhone for is the Google Pixel. So, on Facebook, I never go on Facebook. I don't even have an Instagram account. So I'm kind of like, that company, I don't have a WhatsApp account. I don't have an Oculus rig. So that company is kind of more irrelevant to me of the bunch. So that's kind of why I stick to Google. But, is that right? Who knows? Now let's get to this rant, guys. So I'm in Target the other day. We're on vacation, right? And we go into this Target to get something. And we're in Target, and I go by the electronics section. And I'm in the electronics section, I'm looking around, and I see this big end cap for Amazon. This is in Target. See this big end cap for Amazon products. The Amazon Echo and some other Amazon products, the Fire Stick and the Fire Stick TV and those kinds of things. And if you follow me on Snapchat, you know how I feel about this. I'm like, how clueless is Target is? How clueless is every single retailer out there right now? They don't realize they're at war right now, and their companies are going to become irrelevant. What the hell is Target doing having an Amazon end stand, end cap? I don't care if Amazon's paying them $10 million a year to have that end cap in the store. What the hell is Target thinking having an Amazon end cap in their store in the electronics section? I was right by all the TVs and whatnot. I'm like, dude, are you stupid? Come on. Like, think about this. Let's put a big advertisement for Amazon as people walk by to the TVs and think, Amazon, this 65-inch TV here at Target, that's this price. Well, this Amazon, let me see Amazon here. Amazon beats it by $30. Let me order on Amazon. Boom, they walk out of the store like, oh gosh, it's painful. Like literally the people running these companies should be fired. Like I would fire their ass in a hot second. They're clueless. They're clueless. They're at war right now and they don't realize they're at war right now. They're walking around twiddling their thumbs like, and they don't realize you're at war right now. You are at war with Amazon and Amazon's kicking your ass and you're gonna become irrelevant. But who's running these companies? Who's the decision makers that are saying, yeah, let's put an Amazon display in our store so they can come sell some more products and get some more advertisement? Like, who is making that decision? I'll tell you who. Some guy that graduated college and worked their way up the ranks and didn't really do shit and never started anything in their life, but they just did a good enough job at their job, and then they got promoted, and then they went to another company, and then went to another company, and then they finally got in that position. That's who's doing that. Not the real ones that actually started Target. Just some fucking, I hate when I cuss, just some person that has no conception on what real business is, what real competitiveness is, what it really means to go to war. They're just not in the right set mind frame. These guys at Walmart, they're in the same position. They're just not in the right mind frame for what is going on right now. Their companies are gonna become irrelevant if they're not already irrelevant. And it's just going to happen faster and faster if they're not treating it. And Walmart's just, doing this lackadaisical type thing to try to compete with. Walmart needs to Walmart needs to have the best possible online type platform for looking at products. They don't. It's not even close. They need to have that, and they need to kick Amazon's ass at price. They need to do both those things because they're the incumbent in that game, and they're not doing either. They're just not doing either. They just don't care. And why don't they care? Why don't they put the money in to get these investments done, to do these kinds of things? Well, these companies are run by guys and gals who want to keep their job. How do they keep their job, especially executive management? How do they keep their job? By keeping a stock price elevated. By keeping a stock price elevated to keep the things kind of looking good, to keep the stock price elevated, so then the board of directors keeps voting them and the shareholders keep voting them. They don't want to take the short-term pain for the long-term gain. They don't want to take that. They don't want to have a stock price down 50% next year because they're spending, $10 billion on this infrastructure they need to build out to compete with Amazon. They don't want to do that because otherwise they might lose their job. And so they're stuck in a situation where they can't do anything, and they're just clueless even if they were to do something. And it's frustrating for me to see because Amazon's going to rule the world. They're going to rule the world. The whole entire retail world is going to be ruled by Amazon until someday when Jeff Bezos isn't there anymore and some other clowns are running that company and somebody's going to come and knock Amazon off someday 30, 40, 50 years from now, guys. But for right now, Target, Walmart, every single retailer pretty much out there, they're all doomed because they're just not taking things serious enough. They're not treating it like it's war. If Target was treating it like it was war, they would not have that Amazon end stand in there, right in the middle of the electronics section. Amazon, woo! They would not have that. They would treat it like, we don't want your shit in our aisle. Why would we want an Amazon product in our store? They're not treating it like war, guys. If the United States went to war with Russia, would Russia be making bombs for the United States? Here, use these guys. Would the United States be making bombs for Russia and saying, hey, you know what? Here, we're going to make you some here, guys. Help out. No, because it's war. And Target, Walmart, and everybody else needs to treat it like it's war. And until they do that, they're going to become more and more irrelevant every single day. Mark my words. Keep this video forever, guys. This will be 100% accurate. Thank you for watching, guys, and have a great day.